And we are live. This is Travis from Carter Cow Trading on Trading View, Expert Advisor Reviews on YouTube, Trade with Travis on YouTube as well. Hopefully everybody's doing very well. This is February 6th. I have 9:30. That means that the index market is open. That means that the stock market is open. What we're going to end up doing after going through the disclaimers, being able to take a look at some trading opportunities, talk about some trades that they end up taking, talk about the trades that we end up taking last week. End up having one that we end up posting out in the last live stream that I ended up doing last week that I ended up hitting a profit. Hopefully, we can be able to find everybody else some more trading opportunities to be able to get in. Super excited to be able to go through those with y'all and being able to hopefully be able to make something out of this. So let's go ahead and go through it. I'm not a CPA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. Now, understand that trading involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, as we end up going through, I'm going to put myself onto the camera real quick. Want to make sure I end up saying hey to everybody. Hopefully everybody's doing very well. If you're not familiar with who I am, my name is Travis. Been trading for the last 7 years. End up having a couple pages on Trading View, and have a page on Trading View where we end up talking about trading opportunities, live trading sessions. We primarily focus in on U.S. based pairs. We end up taking a look at indexes. We end up taking a look at oil. We take a look at gold and everything else. And I want to go ahead and jump on to those as well. Also, this linked on one of my YouTube channels, which has finally ended up hitting over 2,000 subscribers. So super excited for everyone. Truly means a lot to me to be able to have the community end up rocking with us with everything that we end up doing. So I'm proud of, obviously, everyone proud of what this channel has done. So let's go ahead and take a look at what's happening with the economic calendar, and then after that, we'll jump into everything else. Today, we end up having we end up having three high impact news events. With the three high impact news events, that means that we're going to end up looking at this is going to end up being one of those traders days to where you have to be able to understand the high impact news may end up affecting the market. As we end up going through it, we end up seeing that something that's going to end up happening from the Canadian dollar. We end up being Governor Macron. We end up having a speech. We got unemployment rate, which is going to happen a little bit later on today with the New Zealand dollar, and then after that, we got economic change with the New Zealand dollar. So actually, today's a trader's day because you still only have two. It's going through the Canadian dollar and going through the Canadian dollar and New Zealand dollar. So it's not three different pairs; it's only two when it comes down to that. So we'll get into that a little bit later on. But as we end up going through and taking a look at that, we see what's happening with the economic calendar. We really don't have anything that's truly going to affect us until 12 o'clock. As I end up taking a look at the markets, I like to take a look at three different pairs first. I go with I take a look at the U.S. dollar first, and then after that, I end up taking a look at oil. I take a look at gold. From there, they'll let me know how we need to kind of move forward when it comes down to being able to look at other tradable opportunities. Some of these things I end up taking a look at, I'm going to end up switching between charts and everything else like that. So you will see that I will end up using trading view charts. You will see that I will end up using smart trader charts only just because of the fibs. And then after that, we'll kind of end up going from there. So let's go ahead and get started. If you are watching live and you have a question and you'd like to be able to talk about it, you'd like to be able to go through and trade with us and be able to see some opportunities, then obviously you're more than welcome to be able to do that. Please make sure that you end up having questions ready as we end up going through. All right, so let's take a look at it. U.S. dollar index. We take a look at it from a weekly perspective. This market is going through its third phase of Fibonacci's and being able to push up. Currently, right now, the market ended up retracing all the way down to the 5-0 position of 12,621 when they end up having its last retracement that ended up happening early in July last year. Now we can see that the market has had it ended up having about, let's see, how many weeks is this? We end up having 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks of overall downside movement. Now we're starting to see about 5 weeks of overall upside movement from that retracement. Essentially, what happened was that the market ended up breaking out of a consolidation that ended up happening at 12,990, and then after that, fell back down and hit support at 12,730, and then after that, started being able to make its push. So clearly, we can be able to see that the market is somewhat bullish when it comes down to movement. So when we take a look at our opportunities, we want to look for buying viable opportunities. But it has to be able to match up on the daily. If we take a look at what's happening with the daily, and let's say if I just want to add on a stochastic just to be able to kind of get a feel for what's actually happening with this pair. I wish I had my old one, but we can go with this one. Currently, right now, from the stochastic perspective, we can see that the market is a little bit overbought. It ended up breaking out of a consolidation area, it had a gap, and then after that, it ended up filling that gap based off of this movement that ended up happening on January 23rd. And as we end up going through and taking a look at what's happening currently with this currently today, we end up having a bullish candlestick, but we're looking like it's showing a inside bar at this particular point. Basically, this may end up being the start of a U-turn when it comes down to movement. So the daily is bullish. The weekly is bullish because we have a counter trend line break for us being able to make a move. We can see that the buyers are starting to buy this up. Let's take a look at it from a 2-hour perspective, see if there is some type of opportunity to be able to get into it. I think this is not a long-term move currently right now because obviously the stochastic is in the buy zone. The stochastic is in the sell zone, but this may end up giving us an opportunity to be able to take a look at it from just a overall tradable opportunity to be able to get in for a short-term movement. And be able to go from there. Now, if we don't have a setup, then we don't have a setup. It is what it is. But we'll take a look at it. We go through and take a look at the last 2-hour phases on this one. The market has completed a de-extension. From that de-extension, let's see. No, let's do this one. Market broke the A right here. Here goes your new fibs. All right. Currently, right now, as we end up taking a look at it, market is going through a new field. The market ended up having a retracement, went all the way down to the 23.6 force retracement of that move. Currently, there is a counter trend line break, but this is not enough of a retracement for me to be able to feel comfortable with this overall movement and being able to jump in and saying that I want to trade it long term up to the D extension at 13,125. I think that I would probably be more interested in being able to see this market fall a little bit more to be able to get more value, especially if it falls back down to 12,990. We've seen that has been a area where we end up having some resistance. Maybe it might be an area where we'll find a little bit more support, turning past resistance into future support and being able to move from there. But currently right now, US dollar, not going to end up being too interested in being able to jump into a lot of pairs currently right now. Just based off of that setup. I think that we'll probably get more value if we end up waiting. But if you're looking at doing this from a reversion standpoint and being able to say, okay, well, this market has started to push up now to be able to catch the movements back to the downside, there still might be a little bit more room to be able to trade it down to the 382, at least at 12,990. But I'm looking at this from a trending standpoint and being able to trade with the trend. So bullish movement is not there as of yet. Let's take a look at U.S. oil real quick. I'm going to switch over to Trading View now. Anytime we end up taking a look at oil, end up taking a look at West Texas Intermediate. Gives you a good opportunity to be able to see what's happening with this. Remember, when you take a look at oil, it has a strong correlation with what's happening with the Canadian dollar. So if oil's going bullish and let's say it's having a strong movement bullish when it comes down to that on oil just in general, then more than likely what you'll see with the Canadian dollar will probably end up getting a little bit stronger. So I'm going to tie that in. We'll take a look at that, and I hopefully prove that with you in this session when we take a look at some Canadian pairs, and then after that, be able to jump from there. But if that makes sense, type in a Y or a yes when it comes down to that. All right, so I'm going to clear this whole chart. I'm going to remove all the drawings and we'll start over from the beginning just to kind of get an understanding about where the market actually is right now. I'm looking at this through Black Bull. Currently, right now, the market pricing is at 73.39 as we end up taking a look at this. So from a weekly perspective, let's take a look at the fields. We're going to end up manually doing this real quick. We're going to start off at the lowest low, and then after that, kind of move from there. So here's your A. Here is your B, which is your fractal high, where you have 2 candlesticks to the left and 2 candlesticks to the right that are below it. So if you're looking at it, I'm going from this bearish candlestick right here. We have 2 candlesticks to the left and 2 candlesticks to the right that are actually below it. So that means that this will end up being our fractal high. From there, the market ended up retracing down to the 23.6. We ended up taking a look at that again earlier. But easiest way to remember it will end up being this. Typically, when the market retraces, it will retrace to a zone based off of Fibonacci's. From that Fibonacci retracement, it will end up extending to an area. So in this case, the market retraced to a green area, so it will extend to a green area. And you end up taking a look at that. We can clearly see that the market end up hitting another fractal high right here at 67.50, but the D extension was at 65.50. Once it ended up hitting that position, it ended up creating the end of this ABCD swing. So that's just kind of giving you an example of what I'm looking at and what I'm looking for when it comes down to this. So here's your second fib. Let's see, I'll move through this a little bit faster so everybody can be able to understand where we're at and not waste anybody's time. Let's see. Second fib was done. Here's your third fib. And I think our current fib from a weekly perspective right here. Okay, so I'm going to get rid of the other fibs real quick. And then after that, we can kind of be able to go from there. Now, as we end up taking a look at this, we can see that the market high on this one was at 126.68. The market since then ended up retracing all the way down. In this case, it retraced all the way down to a red area. So when it comes down to our ABCD swings, just like what I ended up talking about before, you're taking a look at this, it ended up being A, B, C is all the way down here. That means that the D extension is expected to be at 143 for its overall movement moving forward on this one long term. Now, you're not going to see this happen overnight, but if we're just taking a look at Fibonacci's and the way that they end up moving from an ABCD pattern, the expected area where this weekly Fibonacci will end up ending will end up being right here at that area at 143. All right, so just want everybody to be able to know that long term, this is where the market is expected to be able to go. Start off at the C, and that'll tell us where our new fractal is for our daily, and we can be able to work off of that for short term movements. From a short term movement perspective, we're going to go to our fractal low, take a look at this again. Here is our fractal low, go up to our fractal high. That was the first swing. Green went to green. Here's our second swing right here. And this is the current swing that we're actually in from a daily perspective. All right, so the weekly is bullish. If we take a look at what's happening with the daily, we can see that the daily over the course of the last 5 days has been falling down. The market, that means that the market is bearish. We don't have time frame alignment, which means that we don't necessarily would be interested in being able to take a trade today at this particular point, but it would be one of those things to where I would like to be able to find value. And once we end up finding that value in a counter trend line break, then we have an opportunity to be able to get in. Now, if we take a look at the stochastic, we can see that the stochastic is in the buy zone, which means that it may end up giving us a opportunity and a trigger to be able to know that there could be some potential movement that we could be looking at for us being able to get in from a daily perspective. And also, I don't know if y'all noticed this, but I'm going to put this in blue. After I end up finish it, I can see that there's a channel that is potentially building up right here. And I seen this earlier today when I was looking at some trades on Euro United States dollar and pound United States dollar. I've seen that the market started to be able to create a little bit of a channel when it came down to those as well. So maybe something to be able to pay attention to, because that means that if that is the support, then we definitely have a short-term move. We'll look at being able to trade just inside of this channel. Let's see. Make that purple because that'd be a counter trend line break. All right, now from here, market has retraced all the way down to the 8.6, which means that the extension long term will end up being at 88.22. That is what a move is expected to be able to finish when it comes down to a daily the extension move. Currently, right now, we're taking a look at that. We're at 73 currently right now, getting up to 88. You got a lot of great value. You can be able to get in and be patient enough to be able to let it go and be able to move from there. I'm looking at that's 14,788 pips, I believe, if I end up saying that correctly. If you're looking at this from a long-term swing perspective, If we're saying that this is our natural support, this would be something that I may be interested in for a long term move as a set and forget, just kind of get out the way and just let this thing trade. The reason why I'm saying that is because when the market fell down to the 8.6, we end up having a very deep retracement, which means that we can be able to place our stop loss just slightly below the A, and we should not it should not hit when it comes down to our stop loss. A stop loss will probably end up being you're talking about long term, you could say anywhere below one of these lows. I want to say, let's put it just slightly below 67. I would say 67 will probably end up being my stop loss. I'm going to put that in red. The brightest color red. Take profit on this one long term. We end up being at 88.22. So that's the game plan, but what's the trigger to be able to get in and tell you it's time to go? That's I guess that will probably end up being, excuse me, everybody else's question if you're looking at this live and being able to go through it. One, going back to what I just said with this channel being kind of formed, we have a support right here, support right there, support right there. Market end up hitting support right here again. Here goes your resistance. There goes your resistance. We end up having this be a past resistance turn future support right here from that channel. The market ended up hitting this yesterday, and we see that we had a indecision candlestick that ended up being right here with that doji. From there, that's telling me that we take a look at this from a 2 hour perspective, that we probably end up having a counter trend line break that we already ended up breaking through currently right there. We do have that. All right, so this was your outer trend line that was created by the daily. Okay, this will be your inner trend line that is created by the 2 hour. That has already been broken at this point. Typically, what ends up happening from a trading perspective, especially with trend lines, is that once the market ends up breaking a inner trend line, they will end up gravitating toward the outer trend line. So if you're a person that's looking at being able to scalp this market, I will look at the pivots, or I will look at the resistances of previous candlesticks. All you got to do is look over to the left. You're looking at being able to scalp this. You have a better opportunity of being able to scalp this up to right around 74.30. 74.30 just from a short term move. You're looking at being able to scalp it. I think that you could definitely be able to get a lot of value off of this if you're just trying to get in from there. The reason why I'm saying that, just from a short term scalping perspective, is because this is the area where you end up having potential U-turns. This is the area where you end up having past resistance turn into future support. I believe that the market is probably going to end up having a little bit more space to be able to get up to 74.35 comfortably, being able to make you being able to profit off of it. If you're looking at just being able to trade this from a short term perspective, I do like that trade from a scalping perspective. We got a long term trade, we got a short term trade. If you're looking at being able to do this from a long term perspective, I would look at being able to possibly look at being able to enter at this point. You're getting great value, and if the market ends up running from here, obviously this would be a set and forget type of move. Going after, let's see, going out to 200 and let's say bars. 290 compared to having a stop loss of, okay, let's try it over again. Let me say this in a different way. Do some addition real quick. Let me do some subtraction real quick. Get that out of the way. 88.7. Okay, 14. Well, there it is, right there. 14 points. 14.7 points. Going as your take profit, stop loss will end up being, your risk will end up being about 6 points. So you got a 1 to you got a 1 to almost 2 on that one, or definitely have a 1 to 2. You got a 1 to 2 point 1 to 2.2, somewhere around there. Off of that for good risk reward. Long term perspective, I do like that. Now, let's talk about short term for my short term traders that are looking at being able to scalp this. Um, Currently, right now, if I'm saying if I want to go ahead and make this trigger, I would kind of jump in and just go ahead and get into it now. But let's go through the plan of seeing what's the equity that we can be able to work off of. Stop loss, I'll end up placing just below the overall swing low right here that we end up having about 6 hours ago at 72.30. Take profit off of this one would end up being right here for it to scalp. It end up being 74.31. Um, Risk reward will end up being off on this one. Talking about 0.78 compared to 1.25. Risk reward factor is not good on that one. You can place your stop loss below this. You can place your stop loss below this candlestick low right here if you're really trying to scalp it. From a um, just from an equity management perspective, I don't like my risk reward that I'll end up placing in on this one. So I'm gonna hold off on this one. That would have been my short term risk. That would have been my reward. But I do think scalping up to 74.30 we end up being a good position to be able to get into. And then after that, from this actually hitting up here, now you have to be able to make your decision on what you're gonna end up doing. Are you gonna end up holding on to this position, or are we gonna end up seeing um, we're going to end up seeing the sellers kind of get into the market and kind of react off of it. Going based off of what I ended up telling you before. Remember, once the market ends up hitting the inner trend line, it will gravitate to the outer trend line. And this is where your decision is going to end up being made from buyers and sellers. If it breaks and it ends up retracing or retesting, and then after that pushing up, then from a long term trade perspective, I think you have a trade that you can be able to sit into and feel comfortable with. Um, but we won't know that until it truly breaks out of that area. Okay, so that's oil. Oil is at least short term bullish right now. We end up having two tradable opportunities from a swing trader's perspective and a scalper's perspective. The scalper trade, from a probability, I think that it has a good chance of being able to push up to that area. It's just going to take a little bit longer for you to be able to see the true benefits of being able to stay in that. Got it. Let's see. All right, moving forward, that was oil. Let's take a look at gold. We end up talking about two trades on gold last week. If you end up doing this, then you end up profiting off of it. Congratulations if you end up taking those trades with us. I'm doing this based off of Smart Traders charts only because we end up looking at this the first time through it. Um, we end up having two different thought processes when it came down to this trade. The first one was that we knew that the market was showing a wedge. From this wedge, we expected the market was going to end up breaking out in any direction. But there was a better chance of being able to see that this market was going to end up pushing bullish. From there, market ended up breaking out of the wedge to the upside. Then after that, retesting. So it broke out, it retested off of this candlestick right here, and then after that, started to push back up. Our thought process was that we wanted to be able to see that this market would retest, and then from that retest, we wanted to be able to push all the way up to the next area where we end up having a little bit of hesitation, which was 2058. The market ended up pushing up to 2058. Actually, ended up getting all the way up to 2065 before U-turning. I take profit one, end up hitting currently right now, which is basically at square one when it comes down to being able to get it from there. I end up taking profit off of this one at 2060 and just kind of move forward from there. But I am monitoring this one. I do like what I end up seeing currently right now. We just have basically another retest of this wedge that is currently happening. From a trading perspective, we do have a counter trend line break that has ended up breaking as well already. That is currently happening right now on this candlestick for us being able to push up. So if you are a person that's looking at being able to trade this, if we are looking at sideways consolidation now because it is kind of forming up I'm gonna draw a rectangle to be able to kind of show what I mean by that real quick. Um, this may be something to be able to pay attention to from a consolidation standpoint if you are a person that likes to be able to trade that. Um, Here is your supports right here. We can see that this range has been kind of building, since the early portion of January, um, and being able to go from there. Resistance at 2060, the support currently right now looks like 2015. Um, yeah, 2015 from that point. Currently, right now, the market is in a no, is in the middle of the consolidation area, which means that you're trading this as a person that loves to be able to trade consolidation. Being able to catch it at support would end up being the better play. Currently, right now, we're basically in the middle, so I would not look at being able to enter it if you're this being a consolidation trader. But if you're a person that is going based off of this wedge and saying that I believe that there may end up being more out of this move to the upside, then you have a counter trend line break. You can still place your stop loss below the overall lows of 2005 and still be able to go after that take profit position at 2060 again, expecting that the market will end up hitting resistance. But from a risk management standpoint, I would not bet the farm. It'll probably end up being something that you could probably end up doing maybe with a fraction of a percent inside of your account to be able to go from there. Casey, what's going on? Hope everything's going well with you. It's been a while. It's been a while from my standpoint. Hope everything's going well with you. Um, we'll see if the markets basically end up pushing up to there. All right. So gold. If you are a person that's interested in being able to take this a fraction of your percentage to be able to take a trade off of this one, that may end up being something that you may want to think about. Um, if not, you're a person that likes to be able to trade consolidation, I would kind of just stay away from it. But gold is bullish, which means that it's telling me that the United States dollar is getting a little bit weak, and that means that U.S. yen or Japanese pairs may end up being a little bit stronger. So pay attention to that as well as you end up going through and going through your overall trading deck. Cool. Automation system end up catching Euro United States dollar off of that up push that we end up having. Cool. So as we end up taking a look at this, I literally just profited off of Euro United States dollar with one of my automation systems. So let's take a look at that one real quick. See what ended up happening based off of that movement. That has more of a scalping behavior. All right. So it's been a while, but it's pretty much the same as I ended up talking about before off of this one. From a weekly perspective, the long term weekly resistance is at 1.175. We see that they end up happening. This is a consolidation zone that we are in, and if we're looking at this from if we end up putting the volume profile up here, you'll probably end up seeing a large curve that will end up happening based off of that. You'll probably end up seeing something like this in that area. I don't have it on the screen anymore. I do need to get it back, but I will take a look at that a little bit later on. Currently, right now, from a weekly perspective, we end up seeing that the market has had a retracement. It ended up hitting the top of resistance early in on Christmas. Go figure. The week of Christmas. Since then, the market has had 1, 2, 3, 4, 5, 6 weeks of overall downside movement. Currently, right now, it's in the middle of consolidation long term. Not necessarily the best position to be able to get in if you're a buyer at this point. We can tell that again with the stochastic being in the buy zone. But from a short term perspective and being able to catch movements and saying, if I'm thinking about being able to make a move, currently right now, I don't like anything off of this chart. The only thing that I would like is scalping opportunities. Yeah, just looking at it based off of what I'm seeing right now, I always kind of trust my gut when it comes down to first time moves. Oh, well, that makes sense. Market ended up hitting resistance, fell down, went all the way up to the 236, ended up completing the D extension literally earlier today at 107.20. That move has been finished from this retracement up to the top side. Typically, you don't place in Fibonacci's in consolidation zones, but even with that being said, for my people that end up trading modes and trying to look at Fibonacci's as a way of being able to understand where the market is going, I still don't like this move. So Euro United States dollar, you're looking at this from a long-term perspective. It's in a no trade zone, basically in the middle of consolidation. You're looking at this from a scalping perspective. You may end up wanting to look at some buy trades if you end up getting a candlestick formation that you may end up liking. But just from a long-term, if you're just a long-term perspective trader, there's really nothing to do off of this pair. We kind of stay away from that for right now. Take a look at US yen. And then after that, we'll take a look at the indexes. It's 10 o'clock now. The market has already done made its move. I want to see what happened and see if the market's done calm down. I cannot say the same thing when it comes down to US yen. US yen has been bullish. It's been bullish for a few days now. We take a look at this from a weekly perspective first. Market ended up breaking past new highs. It ended up basically doing a double top right here, 150.65. Since then, the market ended up retracing all the way down to 140.70. 140.70. From there, currently right now, we're talking about just overall swings and kind of seeing where the market is. Casey ends up saying daily chart long entry 48.31 with a stop loss. Talking about SPY. 2-to-1 win ratio. I'll take a look at that text. Let's see. Technically, that would be your fractal low. This would be your fractal high. ABCD swing completed right there. Here goes your second move right here. It's actually right there. Completed the extension right there. Went into the vertex zone. From here, we end up having this swing right here. Right here. Completed the extension. And currently, our current fib is right here. Okay. All right, so ABCD swing. A, B went all the way down to the red. It did not hit the A of this move, which was at 126.36. Which means that once this market ends up breaking out, then the expectation would be that US yen will end up popping up to 157.93. Currently, right now, the market ended up having a counter trend line push, rejected again off of the B, and we have a upward movement right now currently with the expectation that it could get up to 156. So I'm going to go back to this position right here. I'm going to take a look at this from a daily perspective, and then I'll kind of let me know what's happening with US yen. It ended up U-turning basically somewhat in the middle of this consolidation, which would kind of give us a thought that this market may end up being ready for a breakout. Now, we don't know that the breakout truly happens until it ends up breaking above the B at 151, which would give us a level 3 trade. Level 3 trades are very simple. You trade in the direction of where the market is actually going, and you just keep on looking on adding positions until it ends up hitting the D extension. But in a level 3 trade, you actually end up getting a higher probability of movement in that direction. Let's see. ABCD. So it has to be this one. Nope. Here. Okay, yellow to yellow. Hit. Good. Here to here. Went all the way down to the 23.6. Completed the extension up there. Here's our new and current fiat from a daily perspective, right? Right here. Okay. And now I can tell why the market ended up having that U-turn. Okay, cool. It's always good to be able to understand how to be able to use fibs to your advantage, because you're taking a look at this and we're saying that, yeah, this market has been in a long-term consolidation. It's done being here literally since April of 2022. Um, but this may end up giving us a reason to be able to say that this market may end up starting to be able to have a push. The reason why I'm looking at this from a Fibonacci perspective is because you look at what a market fell down to. If I can find that rectangle. You look at what a market fell down to, it ended up making a U-turn right around the 618. If you understand Fibonacci's, this is the golden area. This is one of those sweet spots for us being able to get in. The 618, 786, and 86 are very good areas of being able to get into the market. I'm going to place that in orange so people can be able to see it. Um, but typically, that's when you end up having a lot of buyers kind of get into that market and kind of being able to jump in. I think it fell. I still have 86. So that means that this market could be able to push up to 158, which matches up with our overall confluence on our weekly, which was 157, 157.90. So if I'm looking at being able to get into this trade, I'm looking bullish. I would say that, especially if the market ends up breaking out of 150, then it's definitely bullish up to 158 towards our, let's say 157.50, just to be able to get out earlier than anybody else. But that would be my that will be my destination of where I'm looking at being able to take profit if the market continues to show bullish movements. Um, Now the question is, do we have an opportunity to be able to get in now? And should we jump in now or should we wait? Let's go to the 2 hour. 2 hour, we're going to work off of this low right here. I'm going to switch charts real quick. It's basically showing us the same thing, but I'm going to go to the 2 hour and take a look at it from there. That low that we looked at right on the previous chart, which was at 144. I got 140, 140.38. Okay, there it is right there. All right, cool. So currently right now, market fell all the way down to the 618. From there, the extensions that I got 150, 150.18 from a 2 hour perspective. Market ended up breaking a counter trend line break. From here, ended up breaking the counter trend line break, ended up showing consolidation, and currently right now we're basically in the middle of this consolidation right here. I'm looking at this from a buying perspective, so if the market falls, it's going to give me better value. I'm not looking at this from a selling perspective. If the market stays inside of this area and proves this to be consolidation, then I would say that it will probably end up kind of turning around right around 148.22. I'm not interested in being able to jump in until we end up getting a full counter trend line break. The reason why I'm saying that is because we end up having this strong movement that ended up happening on Friday based off of non-farm payrolls. So it's not in my best interest to be able to jump in right now. But I am looking at this of being able to buy up to 150 for the 2 hour perspective, and then 150. What we end up saying. Right around 157.50 for the long term perspective. So got a little bit of time. I'm gonna kind of wait this one out, but I'm not looking at being able to jump in. We can see that kind of going based off of what we ended up talking about before. The United States dollar has been a little bit weak. Starting off this morning, we can see that the yen has started to be able to fall a little bit. Even though the market is in the buy zone, I think that this market has a little bit more room to be able to fall before being able to jump in. You don't get too much of a big move like this without having to be able to see a decent retracement. I think that retracement will probably end up falling. It could fall all the way down to 147 before being able to make U-turn push right there. So I think that we got a little bit more time to be patient. So USD, I'm going to end up waiting on that one. Take a look at spot real quick, because that is one of the ones we end up taking a look at from there. Let's see, it says spot. Let's see. Long entry 44, stop loss 415, take profit 615. these charts. Let's start all over again. Market's in a push zone. We can see that the market. We knew that the market was going to end up being in a push zone after end up breaking 460. It's pushed up to 492, which means that currently right now you are in profit. On this move, we said 484 was our entry. So you got in yesterday, basically, or 2 days ago. Um, stop losses at 415. 415 is this low under here, or you went below. Okay, basically below this candlestick right here when the bullish movement actually started. That was your stop. You got 615 as your take profit. I'm not gonna put 45 in there. I'm just gonna put 615. Obviously, you're looking at this from a swing trader perspective. So we'll build everything based off of that. So fractal lows right here. Here goes your first field that ended up happening. Lead it up there. Second field was right here. Okay. Casey, if you're still there, this is what I would say to you. I would be somewhat weary of being able to jump in this as a buy trade from a long-term perspective right now, solely because if we're looking at this market has hit a new fresh high, basically in this case an all-time high. We don't have anything to the left that will end up giving us any type of information, being able to say that this market has a U-turn area where the market could potentially go to. I don't believe in being able to get buying in at future highs. And the D extension off of this one from a weekly perspective is at 496.14. Currently, right now, we look at this. We got a little bit more room for this market to be able to go and be able to hit this position. I don't think that we have much more. The weekly is already in the sell zone. I think that if you're looking at being able to take this trade, obviously you're gonna have to feel comfortable with the market giving you a little bit of a U-turn and kind of being able to retrace back first before being able to jump in. Um, and I'm projecting to the future. This is what I think will probably end up happening. Um, we're here. We're in the sell zone. We don't have a U-turn yet. The market has pushed bullets. The market will complete a D extension at, let's say, 496.14. From there, um, if volatility goes down and buyers stop getting out of this, it will probably end up falling down to at least 455 first, and then after that, starting to be able to push up. Now, that's not going to affect if you're in this trade and you have your stop loss at 415. That's really not going to end up affecting you too much. But if it does break through that area and creates a new fib, in which that's what it seems like it may end up doing, if that happens, then really your new that area where you think that the market's going to end up falling down to or retracing to will end up being right there, right around a 5-0. So if you're in this trade or just trying to stay in that trade, this is going to end up being one of those ones that'll be a little bit more longer term for you. And you'll have to feel comfortable with that, obviously, and being able to go from there if you're trying to get up to 615. But the next weekly D extension I have is at 585. So you may end up looking at this from a monthly perspective or whatever else may be the case. But I got 585 as one of the next positions where, from a long term perspective, it could go. You're welcome. You're welcome. It's always good being able to take a look at new charts. Okay, see, I think the only reason why I ended up taking a look at Spider the first time was because of you. Let's take a look at go ahead and go to US 30. Okay, cool. Going based off what I ended up talking about, once again, I love doing long term projections because it lets me know what's ended up happening with the market. I have a green line up here saying that the D extension's at 38,853. I think we end up doing that based off of what we ended up doing last week, and kind of being able to go through and take a look at it before. So let's just go through the fibs and we'll just make this one short and sweet. Market ended up retracing down to the green area, which means that the D extension will be a green area. 38,850 was the D extension from that movement. The market ended up having about 6 weeks or about 11 weeks of overall downside movement that ended up happening in October. Remember, October is movement month. It always happens like that. From there, we end up having a strong push up to the upside and then be able to go in and being able to make profit based off of that. We got a little bit more of a push that would need to be completed, which would be about 384 points up to the upside to be able to get it. If that does happen, but the market is bullish, but it is very much overbought. From a daily perspective, daily is in the sell zone. Basically, I'm sorry, the stochastic is in the no trade zone, which means that this is not necessarily a tradable pair that I'll be interested in being able to get into. And if you take a look at what ended up happening yesterday, we can see that we end up having somewhat of a bearish engulfing candlestick that has led to a indecision candlestick, at least for right now, when it comes down to movement. So from a trading perspective, this market went into consolidation, broke out of it, retested, pushed up. We're still in an R3 zone, in which that's where that purple is being shown. But it has not hit this D extension. And from a person that's looking at being able to buy this, I think that you're looking at, you'll probably be getting in on a roller coaster when the roller coaster getting ready to fall. Instead of being able to get in when everybody's kind of strapping their seatbelts up, if that makes sense. So I'm not necessarily interested in this one. I'm gonna kind of steer clear from US 30, at least from a daily perspective. I would love to see this market kind of go back and kind of retrace all the way down to 37,800 before jumping back in. But I'm not interested in that. We'll get away from that. Nas 100. We'll leave off with this one. This will be the last one for today. We end up taking a look at Nas 100. Nas 100 that's hit new highs at 17,566. The question is, where's the market going to end up going? I'm going to remove all the drawings on this one. We end up taking a look at this from from a perspective of being able to get in off of this one. Let's see fibs. This was your low, here was your high, ABCD. Ended off right there. We had right here. 618 completed that D extension. Here goes your new fractal high right here. Completed the D extension. So here is your new C movement from there. Market completed right there. So we're looking at, this is our current field from a daily perspective, which will be right there. All right. So let's talk about what's happening from this one. We're taking a look at Nas 100 for the people that are watching this live. Market has his ABCD swing, which is right here. A, B, C. Market went down to the 23.6. It did not retrace all the way down to the 38.2, so the market is considered not to be somewhat healthy. But the extension off of this one long term would end up being at 18,758 currently. Now, with that being said, anytime that the market does not retrace all the way down to the 38.6, then that means to me the market is in a area called a 80-20 rule. Typically, 80% of the time, when the market ends up falling in that area, it will end up having a little bit of resistance right around the 127. The 127 in this case will end up being 18,072. So going based off of what I ended up talking about before with Nas 100, we said that Nas 100 had a little bit of room that it needed to be, that it had to push up before being able to have a U-turn. I think that we're looking at this one as well, that if it does continue to keep on moving, that's about 500 points up to 18,072 that it could go up to before having a little bit of a rejection, before ultimately U-turning and being able to get into or completing gets the extension at 17 or 18,758. Currently, right now, kind of like what I ended up saying with Nas 100, I'm not interested in being able to trade it solely because of a few different things. One, we already know that the market has hit a all-time high that has not broken out of this resistance right here. So it's not necessarily proving that it's ready to be able to go from a buying perspective. We end up having 2 days of indecision candlesticks. It ended up being yesterday, or actually, yeah, it ended up being right here, which means to me that even though the market is pushing up, there are sellers that are basically knocking this price down currently right here. If that happens, and if you are a person that loves to be able to trade reversions or anything else like that, this will be one of your opportunities of being able to get in with the expectation that the market could fall back down to the B, which would be at 16,963. So that brings me to what I think the market's going to end up happening. I think that ultimately what will happen is this. We see that the rejection is already starting right now. Market will fall right here. Will hesitate probably right here, right around 17,177. Then after that, ultimately fall down to 19,063. Then that's when you're going to end up having a decision being made by buyers and sellers on if this market is going to continue to be able to fall. That will end up being your past resistance turned into future support. And I think that the market could bounce down to that area. Now, you're looking at being able to scalp this again from a reversion standpoint. This would be one of those ones where you can be able to go with a half of a lot size, or just a small lot size for being able to get in. Placing a stop loss just above the overall swing high, let's say 17,700. That'll be about 200 points towards the risk. Reward on this one. You being very brave, probably end up being down to here. Let's say 16,970. But you have a high risk to reward factor off of this one. Now, I would not trigger this trade in today. This is strictly nothing more than just an idea. And the reason why I'm saying it's strictly more than just an idea is because that, one, we don't have a confirmation that the market is ready to U-turn. We can take a look at this from a 2-hour perspective. We can see that market ended up giving us a double top right here, which is more indication that we should start looking at being able to make a move. Let's see. We have that, and we have that right there. I double top. You can see that the market is starting to fall down from there. If it falls below, and that would give me confirmation of being able to say that the market would be ready to go. But from a reversion standpoint, for the people that will look at being able to take this for the U-turn and being able to say, I want to be able to get into a trade today and I want to be able to make a move, that would be my thought process. Sell from right there, stop loss above 17,700. Take profit will end up being at 16,973, or you could say 1700. Risk on this one will end up being 136 points compared to 584. Pretty good risk reward. I do like that from that perspective. 15 minute has gotten into the no trade zone. If you're looking at being able to kind of get a a better spot off of this one. Let's say if you missed it, you're trying to jump in, and even though we see that the market has fell down this morning, the market has fell down how many points currently? 144. If you're looking at a U-turn, I would say wait on the 15 minutes, see where that U-turn actually happens, and then after that, look for a counter trend line break to be able to jump in from there. So wherever this market ends up having a U-turn to be able to do something like this, I would trade the counter trend line break, and then after that, trade it based off of that movement. Okay. There we go. So that's pretty much it. We done went through Euro, United States dollar, US yen. We ended up taking a look at NAS 100, US 30, gold, SPY, um, US CAD, I believe, and oil. And being able to take a look at those trading pairs. You like what I end up doing? Please make sure that you end up clicking on that. Clicking on that boost button to be able to get this out to people so we can be able to take a look at it from Trading View. Obviously, the people that are looking at this from other trading pages and everything else like that, you know what to do as well. Like always, make sure that you end up planning your trade your plan. I see each and every one of y'all in the next live video. Take it easy.